Welcome to XM Pipcast, the show where market meets mind. I'm Zulle Razak, and today we continue our journey into the world of trading, not with charts or numbers, but with stories, strategies, and raw, real conversation. I'm joined by Kar Yong, trader, investor, trainer. Kar Yong coached over hundreds of traders across Southeast Asia and was featured on Singapore's News Asia Money Mind Young Investors. We'll be chatting about beyond currency market, tapping into the next big market trends. Welcome to the show, Kar Yong.
Thank you for having me.
Yep. And Kar Yong, we begin our conversation with 500 in your trading account. Can you describe your trading journey?
All right. So, hi everyone. So I started my journey back in 2012. More specifically, is June. Still remember. I did not had the intention of becoming a trader. Actually, I just wanted to see ways to make extra income, and that's where I encountered copy trading. That's how I got started as well. That's how I put in $500, not knowing everything, and then just copy someone, and that's a good journey to begin with because the first 3 months I actually doubled my portfolio. But the fourth month I lose everything. But I mean, if I've lost first before making, then I would not be in this industry because then the conclusion is, oh, this doesn't work, right? But I actually witnessed and experienced the winning first. So I also witnessed the loss very quickly. So then I realized it's a very interesting market to be in, like what exactly this is, that you can make money, without doing much actually. At the same time, you can lose very fast. So that's where I got started.
Okay, that's interesting. And that time was, how old were you?
21.
21, copy trading.
Yeah.
That's interesting. Because for me, relative to me, copy trading came a bit later, meaning 2000 plus.
Yeah. My time was very raw, so it's like nobody know what exactly it is back then. Okay. So they call it social trading.
Social trading, yes, of course. I saw that you do talk a lot about portfolios, variable income portfolios and passive income portfolio are among the type of portfolios. A hybrid approach. Can you tell us more?
Obviously, in the world of financial markets, there are different ways to be in it. You can be talking about trading, more shorter term. You can be talking about investing. You can talking about, investing in different products as well. So the whole idea about having a hybrid, a mixed portfolio, is actually the objective of diversifying your risks in a way. Because shorter term trading with the volatility of the markets, it's higher risk. Investing, which you prolong and stretch out your horizon, is less volatile. It's more, in a way, stable. So for me, I kind of diversify in terms of like trading. I'm mainly focusing on short-term currencies, commodities. I don't really touch stocks in trading, but I do investing, both looking for growth capital as well as dividend. So that's where I touch into like stocks and indices.
Okay, when you're talking about dividend, you're talking about our Malaysian market or US market?
Primarily US, but I do a little bit in the Malaysia local markets as well.
And any specific sector?
I mean, in Malaysia, you don't have much option.
Of course.
I mean, everyone would know Maybank. So obviously that's one of it in the portfolio. A little bit on energy as well. And in terms of US, it's actually very different. So in US market, sectors to focus primarily would be healthcare. They tend to be a little bit more stable with like consistent dividend.
Not recently, but if you're looking at long term, it's more that one. Yeah.
If you're investing, you can't look at it like 1 week, 2 weeks horizon. Definitely need to look in like quarters or even a year basis.
What's your timeline? You're looking at 3 quarter, 1 year, or the normal institution will be looking at 3 year cycle. What's your timeline for investing?
For investing, I would say investing, when I invest in a company for dividends, the primary objective is really what we call like perpetual, like forever, right? So the idea is, as long as the fundamentals of that company don't change, you want to be invested in that company forever, right? As long as it is, because it's continuously paying you dividend. So that's my vision when I look at companies to do dividend investing. But for capital growth, of course, it's slightly different. So capital growth, we look at maybe a quarterly basis. If the prices goes up, then you look to get out.
A good question to ask yourself is whether that company will still exist 100 years from now.
Yep.
For investment, and for quarter, where the price will go next 3 months.
Correct.
So that's basically the gist of it. Okay, what skills, knowledge that one needs to both trading and also investing?
There is a lot of things to learn in trading and investing. So I would kind of break it down. I would say in categories, like in groups. Like the first thing to know, of course, is the basic understanding of what this market is. This is actually also to protect yourself first, because I think in this industry there's a lot of misinformation. Like how you can get rich quick, how you can make money fast, how is it so easy?
Guaranteed income weekly.
Retired in the next 1 year. So a lot of all this are misinformation. Where back then when I started, there's not many of all this, right? But nowadays with social media, too many. So the first part of I think information and knowledge that one needs is really this, to really understand what exactly the market is, right? What's the actual expectation? So once you're aware of it, then you would want to transit into understanding how it functions. If you want to trade, what are some of the techniques, strategies that you can approach the market? If you're investing, then it's a slightly different skill set. And then eventually, these are what we call knowledge that you can pick up pretty easily. Then there are also the skill set where you need to hone internally, right? So as a trader, it's not just about what strategy, what the market is, when to enter, when to exit. But as a trader, it's a lot about developing yourself as an individual too. Yeah, so that's where emotions, psychology, understanding your risk appetite, understanding your lifestyle, designing it with a strategy. Yeah, so that's the hardest part, I would say.
Do you agree if I say trading is about self-discovery?
Yes. It's a journey where eventually you will discover more about yourself, like how you handle losses, right? How you handle winnings. What are the personality that you like? Some people like a little bit more aggressive, right? Some people like a little bit conservative. So I always take the analogy, if you ask someone, what's the best martial arts? There's technically no best martial arts, because depending on your physique, right? How you build. Are you very tall? Are you very skinny? Then different martial arts would fit you as an individual, right? So same thing in trading. There's no best strategy. So at the end of the day, it's a process of discovering yourself and then design something that fits you.
And finding what suits you, fits you. Yeah. Okay, and how about investment? For example, me, I'm half century already. So if I want to invest in something that I can get the return maybe in 50 years, I might not be around. So looking at the instrument or asset that you invest in is also important, according to who you are and what suits you.
Correct.
So in other words, there is some element of trading that also is applicable to investment. But whatever you do, you need to see what suits you. Talking about equity, what is a good number that a trader, I'm talking about trading, what is a good number that someone can start with? How much?
Nowadays, if you just want to start out and test, right, get a real feel of what the market is, with today's technology and leverage, you can start off with easily $100. But obviously, $100 would not take you anywhere. $100 would not be able to also do proper risk management in terms of lot sizing. So $100 is really just to get a feel of what real trading looks like, right? What real money feels like. But if you really want to be committed and serious into it, something as minimum as $1,000 would be a good start.
The problem with $50, $100, those who start with that amount and stay with that amount, is they don't see trading as a serious thing to do. It's more of a hobby. When I got money,
gambling.
I trade. In other words, it's gambling.
Yeah.
And putting more, it will get you into your routine.
They usually would have the misunderstanding that, the more capital I put in, the higher the risk is. Yes, in a way, there is a risk where if you don't use on trusted platforms, right, then obviously that's the risk. But their understanding is always, oh, if I put in more, I can lose more. But they don't realize that actually you as a trader, you are the one controlling how big, how small you want to put it,
Never
right?
mind. Whatever
Yeah.
I do, I only lost 100. But if I make, maybe I could make 100,000.
Yeah.
What
So
do you think about that?
those are what we call carrying a little bit of gambling mentality. Now, it is a valid strategy if you try to flip accounts, but oftentimes you would actually be successful in maybe one time and then you'll be losing out in many, many times.
Luck.
So, yeah, in a way, to me, it's not a very consistent approach. Yeah. I mean, you can do that with $100, but you can't scale it, right? So
Yeah.
if today I give you 100,000, you
But
probably
the
won't do
problem
that.
is you want to do that again after your success, after you're making maybe $1,000 from your 100, then thinking that you can do it again next week.
Yeah. So you can't duplicate that. So
Yeah.
that's not a very scalable plan.
And hoping that you can become a full-time trader with it.
Yeah,
I got some people that made, maybe they started with 100, then slowly they grew the account up to thousands. Then some event, maybe FOMC or NFP, they make so much, full-time trader, 1 month, no more.
Yeah.
You heard of those kind of stories
Many,
before?
many actually. Like they actually managed to flip their account multiple times, but then after that, in a very short period of time, they will lose a lot or they even lose everything. So those are basically I would say luck as well because they managed to catch on the right move and then flip their accounts very, very quickly. But they don't understand, some of the basic mechanics of trading.
That's the big problem because most of us are leverage traders. We are using whatever the broker give. If broker give 999,999, we take it, or unlimited even we take it. And the thing is, a lot of traders are attracted to this success, the so-called success stories, and these stories being shared in the social medias. Looking at the trend, what do you think about all those short videos sharing about lifestyle, not actually sharing about trading, and asking people to join the trading world? What do you think about it?
Traders or audience would need to be more critical in consuming all this, content. Previously I see a lot like, traders on the beach, using their laptop to trade. But let's be frank, right? If you are going on holiday, why would you be taking your laptop and trading on the beach? So a lot of all this is something that the audience themselves really need to learn how to like filter off, what's real and what's really hype up. If not, then obviously they need to learn through the painful way, right? Like, going through the process of thinking it's true and then trying it out and then realize, it's not true. Yeah, but that's not only in trading, I would say, like in today's industry, with social media, right? Everyone needs to learn how to filter out, content that are real. Which one is for entertainment?
Coming back to our beyond the currency market, beyond trading, what will move the next maybe 1 year? Should everybody go to crypto? Should everybody go back to commodity? Should be in gold, or should I go back to currencies?
Right. Good question, because I think a lot of people who are potentially also watching would want to know the answer. My answer, or my perspective to traders, is always when everyone's looking at it, you don't want to look at it. It's too late.
Yeah.
There's this saying where if today you take a taxi and then the taxi driver or uncle auntie, right, says, "Oh, let's buy Tesla." You heard of Tesla? It's too late because everyone's is in. So as a trader and
So you buy
investor,
BYD.
as a trader and investor, you potentially want to look at things that is not on social media, it's not on the news yet, but there's a potential in it, right? So this is where since we're talking about this is where the knowledge about macro analysis comes in. Things like where is the money flowing? Is it going into certain asset classes? And then, of course, when you talk about asset classes, then there's also like a breakdown on it. All right, so that's something very important. So if you ask me, as a trader, to be honest, it's not so important on that aspect, because as a trader, at the end of the day, you're looking at price movement, and you basically can trade anything according to the strategy and the plan that you have, right? So it doesn't matter what instrument it is, as long as, today gold is moving, right? Do I have an opportunity? Tomorrow the euro dollar is moving, right? Another day S&P is moving. So as a trader, you don't really care. You just look at which asset that is giving you the opportunity. But of course, as an investor, then that is slightly different. But of course, if you're just starting out, there are simple principles and simple asset that is generally safe. So for example, if you ask me, the next 5 years, is it safe to invest in, let's say, gold, right? My answer to that is very confidently yes, right? Because gold is an asset that eventually, if you understand it, it will just go up. It's just a time matter. So same thing in equities indices like S&P. Generally, you hold it long enough, it will go up. So that's the thing where the audience need to understand what's your objective, right? How long are you looking at it? So that is where you can focus on.
Trading is basically trade what you see, but investing is something that you understand.
Yep. That's true, yeah.
And looking at something that is longer term, and trading is whatever set up in front of you.
Correct.
And the problem with traders is they think they know everything. I mean, looking at chart, I know this one is going, but the problem is I already buy, it must go up.
Yeah, I mean, I also have traders asking me like, hey, why today the price moved like that, right? To be frank, I don't know.
Of course.
To be frank, you don't need to know, but the idea is the price are always moving. If it fits into your strategy, it fits into a setup that you're looking at, then, follow that plan, because you have like tested it in a way, right? You know that, okay, out of 100 times, 60, 70 times, it will work out for you. So you don't need, as traders, to be honest, you don't need to know everything. You need to know, of course, the essential aspect, but you do need to know like why today the price dropped, why tomorrow the price goes up. There are just too many factors affecting the price itself concurrently. So there's no like, it's because of this, it's because of that.
There's no one cause or one reason for the price to move. The problem with traders is, if you ask me how many techniques I have, I've been in the market since 1997 up to now. In my head, if you ask me, I will have what? Now, I think efficient, I can do 20 to 30 techniques. And looking at chart, there's no setup. I look for whatever technique I had, I learned 30 years ago. And whatever I must be in the market, because maybe I go for shorter term. And then after that, managing it, I go rojak. This one say buy, now I sell. So that's the problem. The normal problem with traders. They are trading, not the system or the technique trading. What say you? What do you think about it?
Yep. I agree on that as well. I mean, there are traders who face the challenges of, too many information.
I already turn on the chart. I need to enter the market.
So that's the part where I mentioned, that's the part about yourself, right? So that's nothing to do with the strategy. That's nothing to do with the market. That's you as an individual. You too eager to get in, right? You need activity. So obviously with that kind of understanding, if you're someone who needs trading activity, then obviously you need to design a strategy where you're looking at maybe lower time frame, right? You're looking at more asset classes. So you have that probability of getting a setup, a chance to trade. And then you cannot go on a higher time frame, because what if there's nothing on that day, and then you as an individual, your personality is I need something, then you tend to make a lot of mistakes. So that's where you can really see, if a trader is actually facing this, maybe it's not really a strategy problem, it's really about understanding themselves, and then they need to be aware and acknowledge that. But I think one common challenge a lot of traders face is over complicating their whole system, where they take 10 indicators, put it into one, and then try to figure out what's happening.
Until you see dinosaurs.
And my suggestion is always do it simplify it in a way where you can repeat that system, on a day-to-day basis. Because if you can't repeat it and you second question yourself, like, hey, is this correct? Is this not correct? Then you're not really like in the right mood to actually trade, because you're already guessing yourself. You're not sure what's happening.
I always use the analogy, if you cannot explain how you buy or how you sell to your grandma, you don't use that system.
Yeah.
Yeah.
In a way, that's that true. Yeah, you need to simplify your system.
Go as long as it's clear why you in the market and how you manage, how you exit, you are okay. We move on to the next segment of XM Pipcast, the rapid fire questions. Ready, Kar Yong? Surf trade, not copy trade. What was the trade and how did it go?
If I recall correctly, it's a euro dollar trade. Back then, I have also no idea what I'm doing. But that's after copy trade. Then I realized, okay, interesting thing, can make money, right? So I just traded it. To be honest, the first trade actually make money. Yeah. So you can call it beginner's luck, which happens to a lot of traders. Their first few trades, they often make money. But
So
after that,
easy. This one is so easy.
after that is where the real thing comes, right? Yeah. So I actually experienced positive aspect of trading at the very, very start.
That's good. That's good. I don't want to share what happened to me. I entered. I remember my first trade, and my wife was watching something on TV. My risk was only like 20 cent or something like that. It was a micro account or cent account, I can't remember. My hand was shaking. But the risk was losing 20 because of the stop loss. It was very, very tight stop loss. But my hand shaking, and when it turned blue, or at the time, of course, on the MT4, it went to profit, I closed. I made 12 cents. Wow, huge accomplishment. Huge accomplishment for me. Okay, if you could give your beginner self one piece of trading advice, what would it be?
Okay, in a way, if you ask me like that, it's tough to answer, because I always believe experience is what built us to who we are today, right? Certain things have changed in the past that I might not be where I am today. But I would say, if there is one thing I would maybe advise, or even if I knew, right? If I go back in time, is to really put in more focus into this, or even start earlier. Because I feel that in financial market, in trading, investing, time is also an asset, right? Because of compounding effect. Obviously, if you're investing, trading, it takes experience as well. So that's only possible with time. Yeah. So I would say, if I were to have that chance to go back in time, then is to really like start earlier, or even like put in more emphasis and focus on it.
And buy gold and buy Bitcoin.
Yeah, I mean, if you know that lah,
how we wish.
You never know. Now you can buy gold.
Now can talk. Okay, recapping back to what we touched so far, we're talking about trading, finding what suits you, sticking to your system, and understanding if you are investing, understanding what instrument, what asset you are buying, and also looking at trading. Basically, it's a journey of self-discovery, and also looking at the potential of trading and starting early. Starting early is good, but also must understand what you are doing.
Yes.
Of course. Anything else you want to share, Kar Yong?
Generally, that's
more or less about the portfolio hybrid, where you're talking about both trading and also investing, diversification, not putting all your eggs in one basket. Because a lot of people doing that. Can talk about people investing in things, in other things, but they only have equity for trading. And the problem with that is, what I find after years in trading is, those who have capital, they talk about risk management. But those that don't have capital, they talk about making money. They talk about profits.
I mean, naturally, that's the progression as well, right? Because I think if today you're lacking capital, the natural thinking is, I want to grow that capital as quick as possible. Then obviously, if you're in that phase, trading technically would be able to achieve that better than investing. But then if you're in that phase, you also face the problem of psychology because you're in the rush, right? Subconsciously, you tend to risk more, you tend to make mistakes, and then that might spiral out,
Yeah.
as well.
That will be the topic of risk tolerance.
Yeah.
How can one find his or her risk tolerance?
I always give an analogy where so imagine today you have, like, nowadays we don't have a lot of coins, right? A lot of digital payment. But let's just imagine you have like $1 coin or like 50 cents coin, right? And then let's say accidentally you drop it, right? And then it dropped into the drain. So I would say almost everyone won't, because of a 50 cents coin,
They don't
go and dirty your hand and then open the drain and then take it out, right? You probably just let it go. So imagine that kind of like you in that situation. You want to be trading in terms of risk, that kind of like, risk where you lose it, you literally don't feel much, right? So you need to kind of find out what is that number that is like what we call $1.
You might curse the cat, but you don't feel that bad.
Correct. So that's the part where there's no one answer, right? Because depending on different individual financial situation, the number can be very, very different. But at the end of the day, every trade you take, you want to have that kind of psychology, right? So then you are not affected. Yeah, and simple things like if today you take a trade, you can't sleep, then that's something wrong, right? Or you take a trade and then you every time need to look at your phone, then that's something wrong.
So coming back to not just portfolio, coming back to the market teams now, it has been very interesting where people are talking about de-dollarization, people talking about fund out from Wall Street, going to Europe, going to China, going to Asian market. What's the next big move, Kar Yong? What will be big, maybe second half of the year?
Oh, okay. So that's actually pretty near term, I would say. The whole idea about, I mean, you mentioned de-dollarization. To be honest, this phenomenon has happened like past few years. It's just that nobody really realized it until maybe quite recently. If you ask me, will it happen? The answer is yes. Historically, it has happened in other nations before, like before the dollar itself. Yeah. But if you ask me, would it happen in the near term, maybe in the next 5 years? Probably not, because I don't see yet, as of now, something that can replace it. Yeah, people talk about Chinese yuan, but again, nobody really trusts the Chinese yuan. So that's the part where I think moving forward, the focus, if you're looking at like within 22.5, I would say a lot of opportunities would still be within the US, to be honest. The main driver would be very much what I call like sentiment, right? Where there's a panic fear, right? Like people are like talking about Trump, don't know what he's doing. Overnight, he can change his policy and things like that. So a lot of all this will impact market sentiment. So it's like emotions, right? Suddenly, fear, uncertainty, panic. But then the fundamentals doesn't change overnight. Yes, tariff policies will impact fundamentals in the US company. But again, nothing is set in stone right now, right? So a lot of things is like, just talk about it, and then people are speculating it will impact it, and then they are fearful, and then they make decisions on it. But nothing has really set in stone. So that's the part where I feel a lot of these prices are now driven by sentiment, but the fundamentals hasn't changed. And that opens up an opportunity to really look to capitalize on that as well. Because when the sentiments are bad, but the fundamentals are there, eventually when things pick back up, then that's where you see the price really going back. Yeah.
All right, Kar Yong, and that is up today's episode with Kar Yong. Huge thanks to Kar Yong for joining SM Pipcast and sharing his insights on how traders can adapt their strategies with current development in global events and looking at your portfolios. Yeah, if you enjoyed this chat, don't forget to subscribe, leave a review, and follow us on YouTube at XM Malaysia and at Spotify also at XM Malaysia. Thanks for listening, and catch you next on XM Pipcast.